This is Iberian Property Insights, an initiative aimed for those who want to be updated on the Iberian real estate sector. My name is Alexander Lima. Hotel investments, riding the wave of real estate for sun, sand, and profits. In a shifting real estate landscape, hospitality, once battered by the pandemic and macroeconomic challenges, is now fast emerging as a compelling investment opportunity, presenting attractive entry prices. As banks hesitate to finance acquisitions and frivolity from pre-2020 dissipates, the hospitality sector is gradually becoming a buyer's market for underperforming and tired assets. As for yields, they are on the rise, creating opportunities for investors. Overall, Iberia has witnessed a distinctive strengthening attributed to leisure performing exceptionally well and subsequently attracting heightened investor interest, even as activity slows in other European markets. Ultra-luxury hotels have seen the growth continuation from last year, because most of them, particularly in Spain, are actually quite new, so they are still in the ramp-up period. Investors are focusing on trophy assets in key destinations, with most transactions taking place in Barcelona, Madrid, Costa del Sol, and the Balearic Islands, demonstrating that investors are willing to compete on top luxury destinations. However, secondary destinations are a bit more challenging, as the booming performance of hotels contributes to a mismatch in pricing expectations. The Spanish market leads the hotel investment in Europe with 30% of the total volume transacted on the continent during the first 9 months of the year, with 3 deals among the top 5. They are the portfolio of 17 hotels owned by Equity in Muebles and operated by Meliá that was sold for 600 million euros to a sovereign wealth fund of Abu Dhabi. Secondly, the acquisition of the Mandarin Hotel in Barcelona by Olayan Group for more than 200 million euros. And finally, the purchase of the Hotel Reina Sofia in Barcelona that was made together by AXA and Blasen Property Investments. We note here that 2 of these 3 transactions were made with capital origin from the Middle East. While large institutions are entering the hospitality market, smaller mid-sized properties and boutique hotel brands remain under the radar and are highly attractive. The truth is that the current market disruption has opened doors for savvy investors to acquire legacy hotel businesses that, while profitable, may be undercapitalized, undermanaged, or undermarketed. By purchasing these assets at a discounted rate, investors can leverage targeted investments in modernization, management, and marketing to turn them around, all while generating profits. The consistency of demand has enabled growth in both the average daily rate and revenue per room metrics throughout this year, with special emphasis for the RevPAR that has increased 16% when compared to the same period in 2022. Malaga leads the occupancy ranking in Spain, reaching more than 80% during the first 9 months of the year, showing that it is not a seasonal tourism market anymore. Regarding average rates, Marbella and Barcelona took the top 2 places. Looking to the Portuguese investment market, the picture is no different. So far, over 1 billion euros were invested in the country, and around 40% corresponds to hotel transactions. In this matter, the Algarve seems to be, with no doubt, the most attractive region to allocate capital, and just in the month of October alone, 3 deals were announced in the area, with Blackstone acquiring its second hotel asset in Portuguese territory and showing its intention to continue to expand their portfolio in Southern Europe. Some 25 hotels have opened in the country during 2023, and there are more than 60 high-end hotel projects in the pipeline until the end of 2025, which translates in around 10,000 rooms. Of these developments, the luxury segment represents around 30%. But so, after all, how dynamic is the Iberian hotel market expected to be for the coming months? Well, there is a lot of international interest in hospitality, as well as local players looking to diversify their portfolios. And on the other hand, there are also the owners, operators, who because of their good track record have plenty of funding from the local banks to buy and expand. And finally, there is still relatively low international brand penetration in both the Spanish and Portuguese markets, which creates an opportunity for investors to take an asset, refurbish it, and get an upside. This was Iberian Property Insights, powered by Grupo Iberian.